All right. So, say for instance, you're going to have $100 account and you're going to hop into that account with a zero point zero 0.01 lot size. Okay. Right. You're going to get in with that zero point zero 0.01 lot size. So if we do that, when you're hopping into the trade with that lot size, you have to times that by 10. So if you do 0.01 times 10, you're really hopping in. That's 10 cents on each movement. Okay. In the market. So if the market tends to go 20 pips up, meaning it's buying, right? 10 cents times 20 pips, that means that you could make a total of $2 right there just by putting in 10 cents per movement. Okay. All right. You could gain that. That's if you hopped in, you looked, and you saw that it was buying, you want to take that trade, you want to take it for 20 pips, boom. All right, you could do $2. Now, say we went up the lot size, right? And this time we did the mini where it was already 0.10. So if we do that times 10, right, that's $1 per movement. Dollar per movement. Okay, pips right there. So say you see that the market is buying and you say, hey, I think it's going to go for about 20 pips here. All right, I'm going to hop in. I got the account. Say for now, you got $1,000 account. So that's why you up the lot size like that, right? So now you're doing $1 per movement. Well, you do that times 20 pips, right? And you're looking to gain about $20. Okay. All right. And these lot sizes, depending upon what you're trading, some of them are going to be called pips and some are going to be called points. Okay. If it's points, then it's kind of like double. But you'll learn that. We're not going to go over that too heavily today. I don't want to overwhelm you too much. What we're going to do, I'm going to introduce you to the charts. But
Okay.
this is helping you. Did that kind of make sense a little bit there when I
Yeah,
broke it down?
it helped me with the terms a lot. I wrote down like the percentages and everything, but I didn't understand that well. But you broke it down for me, so I appreciate that. That's good.
Okay. All right. Cool. So yeah, just think about that. That's mostly what you're going to be focusing on.
Okay.
Things are a lot simpler now. You're hopping in to economy as well as just in the market, where we have different tools that allow this to be a lot simpler. So you're not necessarily having to do the math. If you really have to do the math and you don't have these extra tools, then yeah, we will probably worry about those units and things of that nature. But as of right now, that is going to be your simplest way, how I just broke it down to you, for you to pick that up and apply that versus trying to think too deep into it. Okay.
Okay.
Right. So let's look at the charts here. This is called Trading View. Now, within economy, this is exactly what you're going to be looking at here. All right. Let me hide all this. Okay. This is what you're going to be looking at economy. Same thing. You see chart by Trading View. All right. Same thing right here. I just got things look different here. I just got a lighter background versus economy. It won't allow you just yet to change that background to a lighter background. So for me, I just sometimes like to have it for eyes. Okay.
Okay. Can I join this meeting from my computer real quick so I can see
Yeah.
it better? All right. Let me see if this works.
This meeting is being recorded.
All right. So now looking at it right here. All right. Whether you are in tradingview.com or you are within Menara looking at the charts like this, okay? Your tools, if you can see, they're both, this is the Trading View window, this is the Menara. They're still fairly the same. Do you see that? All right. So just so you know, it's not a huge difference. I don't want you to freak out and not know where to go to. It's totally fine to use Menara here. But for the sake of purposes for today, so there's not too much on the chart and I can control how to take some of this stuff off, we're going to look at Trading View. Cool.
Okay. Yeah.
All right. Now, I'm going to introduce you to what's called market structure. Okay. And market structure is the most important part about viewing the charts because, again, it's giving you that direction. Okay. It's structure of the market pretty much. Okay. So there are 3 different types of traders. Okay. There are swing traders. And swing traders, they really understand market structure because they're always looking at the bigger picture. When I say bigger picture, I'm talking about time frames, and we're going to get into those time frames, okay? But you have your swing traders, they like to hold trades,
Okay.
for days at a time. Okay, they like to hold trades for days at a time. They look at higher time frames, and that's going to be higher time frames such as the 4 hour, the daily, the weekly, and the monthly. Okay.
Okay.
Next, you have intraday traders. Okay. Your intraday traders, they hold trades within the day. So a few hours or so. All right. A few hours or so for them. Now, they're looking at time frames like 4 hours, 1 hour, 30 minutes. Okay.
Okay.
All right. And then you have your scalp traders. All right. They are quick in and out type of traders. Okay. Quick in and out. So they're going to be looking at the lower time frames. Okay. Lower time frames. So they'll be looking at 30 minutes, 15 minutes, 5 minutes. Okay. Even down to the 1 minute.
Okay.
All right. Does that make sense for you?
Yep.
All right. So these are 3 different types of traders right here. Now, when we get into time frames, your time frames are sitting right up here. And if you hit this drop down button, different time frames will come up within days, hours, minutes, even seconds. We're not worrying about the seconds. Okay. And you're new, so we're not even worrying about the minutes for you. Okay. You're going to be more so looking at probably 1 hour and maybe 30 minutes. Okay. But 4 hour, 1 hour is what we're going to start training you on. Okay. All right. So the most important time frames, if we had to pick, are going to be monthly, weekly, and daily. Because these are the time frames that show the overall structure of the market. Okay.
Okay.
Think about a big box, and you see the big box, but when you open the box, there's a smaller one inside. And then when you open it, there's a smaller one inside. And then when you open it, it's smaller and smaller. That's how the time frames work.
Okay.
Okay. As you go lower, the market will expand the movement that's happening at that moment. Okay. So one thing to keep in mind as well is higher the time frames, stronger the zones. And we're going to be talking about zones next. Higher the time frames, stronger the zones.
Okay. All right.
Okay. Yep. I'm going to write that down. Okay. All that means is that these zones aren't easily broken. Okay. They're not easily broken. So you have a little bit better chance of maybe catching higher probability trades. Okay.
Okay.
Lower the time frame, weaker the zone. Okay. Weaker the zone. Because these zones are easily broken. All right. They can be easily broken. So our scalp traders, that's why they're in and out, because these zones that they're trading at, they know that if they miss their chance, they might miss it. And they have to wait again.
Mm-hmm.
Right? Your intraday traders, they'll catch a move from these time frames here, right? Because as you get a little bit higher, the zone gets a little bit stronger. So they may hold for a few hours or maybe just an hour, maybe 30 minutes. Okay? While your swing traders, they're looking at those higher time frames. So they know it's going to be bigger moves. Okay. All right.
So it's kind of just waiting those 15 minutes, and are you kind of saying, okay, it's going to be moving up for 15 minutes?
So it's going to look like this. You got this information right here. Can I erase this?
Yep, I got it.
All right. So now we get into candles with time frames since you're asking that, okay?
Mhm.
Each of these candles that you see here, white is for buying, black is for selling, okay? Each of these candles, we're on the daily time frame right now, 1 day. These candles are forming based off of the time frame. So this candle right here, you can see we've got 22 hours, 10 minutes, and 50 some seconds left in the building of this candle. It's building off of the whole day. Okay. Trading day, a new trading day just started a couple hours ago. All right. So if I go down to the 4 hour, that one daily candle right here, remember the box I told you about? Think about the big box. This one right here, if I go down to the 4 hour, boom.
Mm,
How many hours are in a day? 24.
24, yeah.
Right? So 1, 2, 3, 4, 5, 6, 7. We're just getting started. Right?
Those are the first 7 hours of that for the trading day.
Right. So let me see what time. Hold on. My timestamp is down here. It'll actually give me exact because that's a little bit too many for the new trading day. We're Wednesday. Boom. So this is technically where we're at right now. But these candles back here, that was for the days prior.
Okay.
Okay. This is for the days prior. If you look, you see this crosshair that's right here, one going horizontal, one going, look at the bottom right here and you see the timestamp that's going Tuesday.
Yep, I see.
Yep. So if I put my crosshair over this candle, it says that candle started forming today, Wednesday, January 11th at 5 p.m.
Okay.
It started to form for the day. So we go down to the 1 hour. Okay, look at that. That's at 5 o'clock. Here we are, we're on the 6 o'clock. This one's about to close in less than 10 minutes. It's got a timer on the candle. We're on the 1 hour. Each of these candles are taking 1 hour to form. Does that make sense?
Yep. And then so is it kind of like the less time you have, the smaller time, the smaller money too?
The beautiful thing right here is because you're thinking about RFX, that's something a little bit more advanced. That's where they trade based off of the timing of the candles. The beautiful thing here, it doesn't necessarily matter. You don't have to base your trade off of a certain amount of time. Like you don't have to say like, because I'm on the 1 hour time frame, I need to hold this just for 1 hour. No, you could be on the 1 hour time frame. Your trade could hit in 30 minutes or it could take 3 hours to hit. You see what I'm saying? So it's not necessarily based off of time. What we look at time for is when we know that there's pertinent times in the market. So there's pertinent times, you'll learn this as you go on, but like a 9 a.m., a 10:30 a.m., then you got like a 2 p.m., then you got a 3 p.m. time frame that's kind of pertinent, then you got a 3 a.m. time frame that's kind of pertinent. When you know of these pertinent time frames, you're going to then start saying, okay, well, we got so many candles until that 3 hour pertinent time frame comes. So when that time frame comes, we might get a certain candle that tells us to buy or sell. Do you see what I'm saying a little bit now?
Mm-hmm.
Okay. So don't necessarily think too much. I don't want you to think too deep into it. Just listen. But of course, don't hesitate to ask questions. But yeah, don't think too much in it. Like I'm gonna make sure you're set up straight. Okay.
Okay.
Make sure you set up straight. But also don't get too involved to where you're like, okay, so wait a minute, like now do I need to hold it for a certain amount of minutes and things of that nature? No, you'll get there. All right.
Okay.
All right. Trust me. So you're here and we're just going to expand it a little bit more. Let's go to the 30 minute. Boom, we're opening it up. So there's 2 30-minute increments in 1 hour, right? Because it's 60 minutes in an hour, right? So here, that's at 5. Here's the 5:30 candle. Now, this 6 o'clock candle that we see that's on a 1 hour right here. Mm-hmm. Now we got 2 candles within that. These 2 right here. You see that?
Yep.
All right. 6 o'clock, 6:30. Now this one has coming up on 7 more minutes until it closes because we're coming up on a 7 o'clock candle. So everything at every hour, these candles are going to be giving that final close. Even right here, we got 15 minutes. Okay. 4 candles in that 15 minutes. This one started at 6, 6:15, 6:30. Here we are, 6:45 is happening. And that's about to close for 7 o'clock. Okay. So do you see now what I mean by you looking at that bigger picture and things start to just expand out?
Yep. I see it. How the boxes. Yep.
Yeah. Good job. Good, 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 good. You're tracking with me. Beautiful. So, yeah, depending on the selected time frame, whether you're on the daily, 4 hour, 1 hour, that's going to be determining how long it's taking for each candle to form. Okay. Cool. So as you know, this is a Monday candle, Tuesday candle, Wednesday, Thursday, Friday, then start back Monday, Tuesday, Wednesday, Thursday, right? Because we're on the daily time frame. Cool.
Yep.
All right. So, and then also keep in mind some of this stuff I'm going to repeat its on purpose because I need to repeat it to you because it's going to fall into your subconscious. So that way you start to grasp on it more. All right.
Okay.
So it's all, I don't think I'm just repeating it because I think that you're not picking it up or you're dumb or stupid. That doesn't mean anything at all. I'm doing it on purpose. It's to help you out.
So I can latch onto it. Yeah.
Yep. Mm-hmm. Yeah. So, now I want you to know our job as investors in the market, when we're here, we're looking at these all these candles here, right? We're seeing what in the world's going on. Our job as investors in the market is to box in price and react to it. You want to write that down. Our job as investors in the market is to box in price and react to it. All right.
Okay, I got it.
So now let's get into some structure. Also, what I meant to tell you when it came to time frame and then talking about pips is not only is it higher the time frame, stronger the zone, but it's also higher the time frame, bigger the pips because you're getting bigger moves.
Mm.
All right. Smaller the time frame, you can still get pips on the smaller time frame, but just know, you might get 100 pips on a 1 hour, but if you go out to the daily, you might see 1,000 pips.
Okay.
See what I'm saying? Okay.
Yeah.
All right. So,
Yeah.
so yeah, here's what I want to show you. When it comes to structure, all right, we were talking about structure. All right. We're going to talk about first knowing the condition of the market. All right. It's either going to be trending. All right.
Okay.
Ranging, or another word is consolidating, which means going sideways, or choppy. All right, conditions of the market.
Okay.
So,
Oh, 1 sec.
no, you're good.
This meeting is being recorded.
All right. So, getting into these conditions right here. All right, let's start with the first one with trending, up or down. This right here, all right, this here, what does it look like it's overall doing? Up or down?
Going down.
All right, exactly. So you can already identify that. That's letting me know your eyes are already, you're already seeing that, okay? So when this happens, there are a series, we've got points right here. You see that? Where she makes these pivotal points and then she turns, right?
Mm-hmm.
This right here, lower low, lower high, okay? Lower low, meaning this low was lower than this one, okay?
So in general, it's low, but there's highs to the low.
Yeah. So lower high right here, okay? Because this, although it's low, but this lower high, it's a high, right? It's still lower than this one.
Okay.
Okay. Then again, lower low. Okay. So this is a trending market from what we can see right here. She's trending down. So if she's trending down, should we be looking for buys or sales?
Sales.
Probably should be looking for sales. We want to follow the trend. The trend is your friend, right? She's pretty much kind of giving you that first clue as to what's happening. All right. So we got that, but let's look, because with inside of this trend, let's see what happens here. Go back over, right over here. Okay, this is still part of the, let me put my marker on here just so you can actually see it's still a part of the downtrend right here. Okay,
Mhm.
we're trending down. Boom. Now let's go down to the 4 hour. And then if we go to the 4 hour, and let's just go, let's see, let's go right here. All right, we go down a little bit more, a little bit more. All right. We zoom in right here. I'm gonna delete this because we know on the higher time frame we're on a downtrend, right?
Mhm.
But on the 1 hour, what does it look like is happening right here?
Oh, it's climbing.
It's climbing right here. Okay, that's what it looks like. So here, this will be looking of a trend going up. Okay, and here, as you can see, higher high, higher low, higher high. This high is higher than this high. Higher low, although we have a low, this low point, okay, is still higher than this low point. All right,
Mm,
right?
okay.
Higher high, higher low. All
So,
right.
let's say that the third circle, if it were to drop underneath the circle behind it, then like completely underneath that one, then it would be considered a like it'd be
Now
considered a
it's
signal.
considered that the trend is probably, we got to see if the trend is getting broken.
Okay.
Okay, so don't switch it back and say it's now considered a lower low. All right, it's not that
Okay.
just yet, because we still have overall series higher highs, higher lows, higher highs, higher lows. Look right here. This was an equal higher low. It equaled up right here. And then look what happened. She failed.
Mm,
She broke this one. She broke this one, right? And
mhm,
then came to right here and just equaled up with this one. You
mm.
see that?
Yep.
Mark is not perfect, okay? So this is showing you a trending market, okay? Another trending market. So I did this to show you that although on the daily, we are in a downtrend, it's possible going down to a lower time frame on the same currency, it could look like a different type of trend.
Oh, okay. So for it going down in the day, would you could still be buying for it to be going? You could still be buying for it, like going up.
So, yep, you could still, and what's happening here is you're seeing these moves happen right here. And all you're in is what's called a pullback. Okay. Every time as we are overall going down, you see that this is the moves we're going down. But before we go down again, we do a pullback. Do you see that? Where it goes
Yeah,
the reverse way.
It pulls up. Yep.
So, and then that right here, this little movement right here, that was showing, that's why it looked like it was buying, because we were just in a pullback. So do you now see why it's important to be knowing what's happening on all the time frames?
Yes, ma'am.
Because
Yep.
if you were here and you're like, oh, well, it looks like it's buying, I'm about to just keep buying, and you're not aware that, hey, you're just in a pullback from the overall time frame, you might get fumbled up here. But if you understand what's happening in the market, right, you might capitalize and say, all right, overall, I'm gonna sell right here. Okay, I'm gonna go ahead, I'm gonna pop an entry, I'm gonna sell right here. But you know what? I'm gonna also capitalize and eat off the market some more. And when she comes down and makes this right here, lower low, I'm gonna pop a buy and ride it up. But when I see her start to break the trend of the lower low, boom, I'm gonna hop out and continue for my sale.
Okay,
See
so
that?
break that. Okay.
Ask questions. What you got?
I'm looking at the last two lines. Yep, right there. Those two. Where you put that lower low.
Where, right here?
No, it's right there, right there. Go right there where you passed it.
Ooh.
Going. It was two lines and you connected them.
Oh, hold on. 1 second.
Yeah. So yeah, that line right there. When you said so, you kind of based your sell off of it at that top from that lower low. Could you explain that a little bit more?
Okay, so from here, if I went on, say for instance, I hopped in up here on the higher time frame for a sale, right? And then she started to fall, and I realized that as the market falls, she's going to need to pull back some to correct herself. Okay, she's going to need to correct herself a little bit. So as if I understand her pullback, I'll wait to see, hey, okay, she formed a lower low right here. And other aspects go into here, like candlestick signals. You have a strategy behind it, so don't think too far into it right there. But we're just using hypothetical right now. Okay, let's say I found what I needed to find, hopped into the buy right here. Boom. Right. Well, when am I going to hop out of the buy if I'm still in the sale? Okay. Well, for the sale here, if she doesn't push past this little area right up in here, where we can see prices hit multiple times, if she pushes past that, then cool. I may need to be trying to hop out of my sale that's up here because she could be reversing. But because she stayed below and I saw her start to turn around here, right? And then when I saw, even again, in this little movement, right up in here, we got a little bit of movement up in here where the market likes to pull, right? You can see where price has touched that area multiple times. If I delete this, look at that. We've had movement in this area, right? You see that? So if I see she falls past this right here, past this little area, let me erase that. All right, past this little area. So that's back right here where my lines were at, right up in this area here. If she passes past that, which she did right up in here, I'm ready to hop out of that buy. Boom, just to continue with my sale.
Should you you should hop out that buy right where you did that line, or would you hop out that buy earlier than that?
You're gonna base it could be earlier than that. You're gonna really more so base it off of what's happening, the structure of the market, which is what we're learning about right now. Okay. So but don't think too heavy into it. We're getting a little bit ahead of ourselves. This is still just trends. I just want to show you, what it looks like when you're seeing trends.
Okay.
Okay. So, any questions?
You cover them so far, the ones when I've asked.
All right, cool. So let's get this out of here real quick. Get this stuff on. All right. So next, let's talk about ranging. Okay, let's talk about ranging. So I'm gonna go back down to this same area that we were just looking at. All right. So we saw the series of higher highs, higher lows, higher highs, higher lows. So she's trending up right now, right? She's trending up right now. And then price came, right? Made this equal higher high, made an equal higher high. And it's equal because this point in the market did not push past this point. So it didn't go higher than that. So it can't be a higher high. You see what I'm saying? All right. This is higher highs because this high is higher than this one. This high is higher than this one. This one right here did not surpass this one. So it's an equal high right here. Okay. They're equal. Right. So here is an area where price came and fell, and then she came right back equally to this area and fell as well. Okay. And when she fell, she kind of stopped in this area right here. Okay. She stopped in this area right here. And if I pull this box back, it's to the same area. So now with this, she broke the higher low right here, broke this higher low, but made a what? Equal higher low, because she did not go past this. From what we can see right here, she did not break past this. Do you see that? So that's an equal higher low. right? When we see equal higher lows, or we see equal lower highs, or equal lower lows, or equal lower highs, or whatever, all those, when they come to equal points, we might start to see what's called a range. Now, ranging markets is when, again, price is going sideways. Just going sideways, right? She's not really going up, and she's not really going down. Do you see that?
Yep.
Right? Not really going up, not really going down. So now with the range, we can see when she comes here, what does she do?
Go up.
Back again, what does she do?
Go up.
What does she do here?
Go up.
All right. So this is giving us structure right here. Okay. This is giving us structure. So when we see that she buys in this area, this is a term known as support. Okay. Support is the floor. All right. The market tends to buy here.
Okay, so you can kind of floor, meaning that it probably won't go underneath that.
It's the floor. It's giving support. All right. Then now, if we see prices hitting the floor, boom. Hitting the floor, boom. Hitting the floor, boom. Hitting the floor, boom. She's ranging. Now we got a ceiling. Do you see that? Now we got a ceiling. So this is the ceiling right here. And this is known as resistance.
Is that that's where they would sell at the top?
Market tends to sell right here.
Okay.
Okay. All right. So we got resistance, we got support. All right. So, and one thing, let me go back right quick to trends, because one thing I meant to tell you, when you're identifying trends, you can use a tool right here called the trend line tool, and you can connect the points to see how the trend is going, okay, to showcase it on the market. All right, you can do that. Now, in order to have a valid trend line, you want to have at least 2 touches on the line. That's how you're going to know. Like, you don't want to have to force this thing and make something touch. You want to start at the first point, pull it on up, keep it as clean as you can, right? Once. All right, sorry about that. So you want to make sure you have multiple touches here. So you see we got a touch here, and touch here. If you ever need help with like the strong points, you can come up here and you have different ways you can show price. Right now we got it in candles. If you switch it to line, it'll show those points in the market and it'll help you. Does that make sense? You see that? And then if I switch it back to candle, look at that, boom. Lines right up, okay? So that's a valid trend. You wanna have, that's the valid trend line. Like I said, 2 touches. When you wanna showcase if you actually have a valid trend, like something that's strong, right? Make sure it's at least 3 touches, okay? 3 touches on the trend line to make sure it's a valid trend. At least 2 touches for the valid trend line itself to be able to draw the trend line.
Okay, so when you confirm that it's a solid like trend or trend line, is that like indication that you should go and try and buy?
That's indication that now you just know the direction of the market.
Okay.
You understand where the market is going. Now you want to use strategy to figure out when to enter.
All right, and I had another question. So with the chart to the right where it kind of goes up in a hump and then goes down, right there. So when you start seeing that indication, when should you get ready to start entering?
So again, so think about this. All right, getting ahead a little bit. Think about this. It's every entry takes a strategy. Every time you enter, you're going to do it based off of a certain strategy. Okay. Now you're not going to be trading every single strategy in the world. There's thousands of strategies out here. You'll never make it if you try to do that. You're going to find you one strong strategy, something that makes sense, something that works with you. Okay. And then that's what you're going to use to enter. And when you find that strategy, you're going to just be doing the same thing over and over every time. Right now, this is exciting to you because you're learning something new. After a minute, once you understand this thing, it's going to be boring because it's like, this is easy money. I know what I'm looking for. I come here, I wait for this to happen. I look at the direction. I see it's trending up or I see it's trending down. Cool. Now, based off of that, I follow step 1, step 2, step 3. Now I'm ready to enter. And you're going to be doing the same thing over and over. Make sense?
Yep.
Fine. All right. So that was trend line. I totally forgot about that for you, but that's that. Now we got this ranging market right here. This is the definition of a ranging market. You got your top, you got your bottom, and you got price just going right in between. Okay. Just ping pong pretty much, back and forth, back and forth, back and forth until it decides to break out. Okay. So this is the ranging market. All right, this is what this looks like, and we'll come back to this. Now, going with the choppy market. Okay, we got 3 conditions. We went over trending, went over ranging, going sideways. Now choppy, okay? Your choppy market. This, let me see. Let me find me something that's kind of looking a little crazy. Probably right up through here. This all up through here is kind of a choppy market. And here's why. Because at first it looks like, okay, cool, higher highs, higher lows, higher highs, higher lows. I'm not sure what happened up in here. Then we got a higher high. Now I'm not sure what happened up in here, right? It's looking weird again. Then it goes down, then it goes up, then it goes down. Now it's back up, choppy. Do you see that?
Yep.
It's not really a clear cut of what in the world has happened. Like overall, yeah, we can see it look like we may be going up. It kinda is look like we're going up, but look how unclear it is that we're going up.
You can't really, yeah.
Yeah, it's like, I don't know where I should enter. Should I enter here? Should I enter here? Like, I don't know where is the safest place because it's really weird right now.
Yep.
So choppy markets, you stay away. If you come here and it's choppy, just back off. Okay? Your best bet is to trade in clear markets like trends and ranging markets because you can clearly see what's happening. Okay? It's a series of patterns. Choppiness won't show you any patterns. It's just going to be all over the place.
Okay.
Make sense?
Yep.
Okay. So we got that. Let's go over the behaviors of the market. All right. The behaviors of the market. So make sure I'm not forgetting anything for you. All right, cool. So, like I said, market structure, most important skill needed as a trader, most important lesson here to learn as a trader is learning this market structure, because market structure is the study of market behavior, okay? Market behavior. So the market is always moving in these moves here. There are 3 behaviors to the market. So let's go ahead and let's delete this for you. All right, and another way right here, if you want to kind of write this down as well, since you see what's happening here, okay? This is more so going to be, you're going to get a series of higher highs. H stands for higher highs and higher lows. HL stands for higher lows, okay? And also, okay, lower lows. Okay. Lower highs. All right. That's going to be for the trending. And then for the ranging, this is zone to zone. Remember, because it's down at the support zone, then it's up at the resistance zone. Down at the support zone, back up at the ceiling. Down at the floor is zone to zone right here. Okay.
Which ones do you think are easier, the ranging or the trending?
I like ranging markets personally. Okay. But I never like to tell somebody which one may be easier because everybody's gonna be different of what works best for them, right? So you're gonna be able to get in there and play around and stuff some. You'll be able to know, and how you're gonna know which one you actually like more is you'll notice how easy it is to find an entry. So if you're like, man, it's easier for me to find an entry on ranging markets, so I just like ranging markets better. You know what I'm saying? Nothing's wrong with trending markets, but I find entries easier on ranging markets. Or you might say, you know what? Yeah, that's cool, but I actually find it easier on trending markets. That's how you're gonna know which one you're gonna feel like is best for you. You see how it's like up to you. It's kind of like that, what's working for you, right? Okay. And then your choppy condition is just noisy because it's all over the place, no clear direction. All right. So I'm gonna go ahead and delete this now that you got this. I am going to delete this one. Because we got a idea here. All right. So now let's talk about the behaviors of the market. And then after we talk about this, we're going to tie it all together and just mark up a chart. And you're going to see now how it works. Okay.
Okay.
So for behaviors of the market, 3 behaviors of the market. It's going to be impulse. All right. Impulsive moves. We're going to call that impulse. Corrective moves. All right. Going to be correction. And continuation moves. All right.
Okay.
Impulse, correction, and again, it's continuation. All right. So these are the 3 behaviors of the market. Here's what it looks like. Okay. Impulse, looks like that. All right. Impulse. Then correction. It'll pull back. All right. Pull back. And then continuation. Right? Impulse, correction, continuation. And then we can go opposite. Impulse. Okay.
Okay.
Correction. And then continuation.
So basically, impulse down, correction up, and then continuing would be like,
What does that look like we're going? Trending what?
up.
Kind of looks like we could be trending up. Okay.
Mhm.
So you may see, yes, now I'm glad you're seeing that because yes, that's why it's the behaviors of the market, because the market is always making these moves no matter what. And even here, higher low, higher high, higher low, higher high, right?
Mhm.
You'll see the movement there. And then if we're going the opposite way for selling, right? Lower high, lower,
Low. Yeah.
lower high, lower low, right?
Yeah.
Market's always making these moves. The market makes these moves so much that they're the behaviors of the market that you can actually take trades based off of this. Okay. So your impulse, all right, tells you the direction the market wants to go. Okay. That's your impulse. Your impulse tells you that. All right. Your correction confirms the direction, aka the impulse. It's confirming it. By correcting and going the other way, it's trying to give confirmation. Okay. And then lastly, the continuation. The continuation is usually our entry. All right, for the buy or sell. We usually enter on continuation.
Okay.
Right? And continuation can always also be looked at as what? An impulse. Do you see that?
Yeah, that's what I was gonna say. It looks
Yeah,
like it's
it
going
can be
to
looked at as
be.
impulse. So technically you do hop in on the impulse, but you have to get the confirmation of it. So instead of hopping in on this first impulse right here, where you're not really sure where the market is going, you're gonna wait for that confirmation, that correction right there. And then from there, hop in, because if you're looking for the buy, right? And you're gonna be hopping in based off of the higher low to push you forward, you're hopping in on the impulse too. Does that make sense?
Okay, and then this may be a little bit more forward. So if let's say if that's like a day and you did a certain time, like 30 minutes, or like I don't know if you kind of get what I'm saying, but
I think I do. You're thinking too far into it. Don't think about, although you're on the time frame, don't think about that's how long you got to hold the trade for.
okay.
Okay, because you can't control. Once you hop in, you have no control how long it's gonna take to hit TP or to stop you out and you lose. You don't know that timing. Okay, there's another part of trading that actually gives you that luxury where you can control the timing, but you got to be on point. Right now with Forex, you don't need to worry about time.
Okay.
Okay. So once you get better, you might have a thing for it. Once you get better and get a little bit more seasoned here, we can show you that side where you can control the time. We call that side making money in minutes, because yeah, you can be in a trade for about 1 minute and make the same amount as you would if you was in a Forex trade, not controlling the time. Okay. But it's tricky because people can get a little bit ahead of themselves and start gambling. So it has its pros, has its cons,
Yep.
All right. So those are the behaviors of the market right there. Again, that impulse showing you the direction that the market wants to go. That correction is confirming the direction. And then that continuation, that's usually going to be the continuation of that trend. And we are going to hop in on that for our entry there on continuation. Okay.
Okay.
You don't want to chase the impulse or trade against it. So if you see you've got an impulse here, don't try to chase it. Wait for it to pull back and then take your prime entry on the continuation. Right? And then even right here, say for instance, it already took off at continuation, but you missed the move. Well, this is the same thing as an impulse. Now, if you try to hop in, you're going to be chasing the impulse again. Just wait for the pullback. It'll do it. These are the behaviors of the market.
So start at the very bottom.
Right. Okay. So if we go and look at the trends over here, right? And we're here. You can just see the market is always making these moves. Impulse, correction, continuation, right? Okay. Always making it. Correction, continuation, right here. Then we got it right here. Impulse, small correction, continuation, right there. Okay. Now, this is not so a continuation or correction. This is more so just like a ranging correction, right? Just starting to range.
That's where you kind of like to go in?
I like to more so like right here. This is a range right here. I see the market going sideways right here. So more so for me, I'd like to see if I can catch any plays off of something right here. What I'm looking at, I really didn't. I wouldn't have a chance to catch a play because it didn't follow my rules. But even when I trade impulse. Excuse me, that's the wrong tool. Sorry. I trade impulse, which I call a breakout. And I wait on a correction to continue down and I'll hop in here. See what I'm saying? But I didn't get that pullback right here. You see that?
Yep.
Okay. So the market is always making these moves, impulse, correction, continuation. The impulse doesn't really give you a pattern of what's happening. It's just an impulse. As you can see right here, it's just an impulse, right? Here, it's just an impulse. It's not really trying to tell you what pattern, okay? What is it? Is it going to be, and when I say pattern, I mean, is it going to give this pattern right here, that same impulse, correction, continuation? Sometimes it'll just push, go sideways, go choppy, look crazy, push. Like, that's not really giving me a lot. I really wanted to, hey, we look in, where's a good example? One second. Okay, something like this. Say for instance, she was like buying here for a little minute. I mean, she was selling here, she came, so then look. All right, here's to impulse out. Okay.
Mhm.
Gave a retest and then continuation higher. Right? That's still the behaviors of the market. And this is still as well as higher highs, higher lows, higher highs, higher lows, higher highs. See that?
Yep.
That's trending right there. You're following the trend. That's why you hopped in for the buy. Okay. Versus something that is, let's find another range in market that gave me some type of retest. Let's get a pair on you right quick. All right, right here, we can see we got the resistance area right here where price came, boom, so, came, so, okay, so then what had happened? Price impulsed out, came back and retested, and then continued, right?
Mhm.
See that? So, and then this right here, this was based off of the market ranging because she really was sitting right here for a second. See
Mhm.
that? You see how she was going sideways for a second?
Yep. That's
Right? Sideways. And then she's finally pushed out and then kept going up. Okay. So that is your behaviors of the market. We went over trend line, we went over the conditions of the market. Now let's hone in on this of information we have right here. And
okay.
I want to show you how we analyze the whole market. All right. Okay. So we're going to start out at the top. All right. This is looking at the market from the very overall picture. Okay. You can see right here, this market didn't start tracking until May 1st of 2002. That's when it started. Okay. And now it's been tracking all the way over here. This is the monthly time frame. Okay. So if I'm looking at the monthly right now, let me delete this stuff up here. Remember, our job as investors is to box in price and react to it. So price, when I say price, you might say, okay, well, what does that mean? I think I understand, not really sure, maybe tracking, I don't know. Okay, look over here. And that timer, this dotted line that's on my chart right here, this is active live price right now. This is live right now, okay? Of this candle forming.
So, okay, so when the candles form, that means you're able to buy in or sell.
Yeah. But
And
right
then
here,
okay, so
this line is tracking like the movement right now while it's forming.
okay.
Okay, so eventually, depending on, we still got 19 days left in this one monthly candle right here. It might rise some or it might drop some, but right now it's forming. So we can't tell what it's doing right now. We can tell what's happened in the past, but on this one candle right here, we can't tell fully because it's still forming. Okay, so let's mark up support and resistance. Okay, support and resistance, where we see buys and we see sales. Okay, now I want to point something out. We're going to use the term support and resistance for 4 hour, well, 1 hour and below time frames. Okay, we're going to use the terms demand and supply for the 4-hour, daily, weekly, and monthly. All right. Now, don't get too caught up in this. I'm going to tell you exactly what this is. Support is where buys happen. Resistance is where sales happen. Demand is also where buys happen. Supply is also where sales happen. Why do we switch the name if it still means the same thing? On higher time frames, you're going to get bigger buyers and bigger sellers. Okay?
Okay.
Bigger buyers and bigger sellers. And all I mean by that is this. Price was in the supply zone right here, and she failed. This right here was 1,500 pips. Okay? 1,500 pips right here. And then from here, she failed again out of this supply zone. And this gave us 2,500 pips, right? But if I go down to the 1 hour, and let's just say I grab this range, this is our bottom. There's support. Here's resistance, right? And I do here, out of this resistance area, 34 pips.
Also a lot less of
a lot less. You see what I'm saying?
Yeah.
So support and resistance, supply and demand, still meaning buys and sells are happening in these zones. It's just on the higher time frames, we're going to refer to buying as demand, and we're going to refer to selling as supply, because it's bigger sellers and bigger buyers in the market right there.
Okay.
Cool?
That makes sense. Yep.
All right, cool. So now let's get in here. Let's just let's mark this down so we can get off. All right, so we're on the monthly time frame. I can see a supply zone sitting right here. Okay. If I look to the left, so this is what we see right here. But if we pull this box over to the left, we can see, what did she used to do here before she started selling here?
She'd go equal.
She used to be a demand zone. She used to buy right here.
Yeah.
Right? And then price impulsed out of that demand zone and then started making it a supply zone. You see that?
Yep.
So think about a house. If this is the main frame of the house right here, and you want to go down in the basement, you got to break through the floor. Now you got a new floor in the basement, and that floor that you just was walking on to get down there is now your ceiling. Make sense?
Yep.
Okay. So boom, now that can make sense as to how, well, dang, how was it selling there? How was it buying there and now selling? Think about a house.
It went to a whole nother area. Yeah.
Went to a whole nother level of the house.
Yeah.
Okay. All right. So boom. Now, again, our job as investors, box in price and react to it. So price is right here. We need to box this in. Now I'm going to find a consistent demand zone, which is sitting right here. This is a demand zone. Buying, 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 buying. But look what's happening right here. Looks like price is breaking through the floor and trying to form maybe a ceiling right here, where she might go back down, or she might push back up. We don't know. Okay. Your job is just to get as close to price as possible. So now that's what we see here on the monthly. We see that price is ranging, but she possibly just broke out. Okay. But she hasn't confirmed which way she's going to go. So now let's go down to the weekly. We go down to the weekly. We can see she is kind of trending down. It's a little choppy because these candles are a little small. It's not really giving us, very clear-cut, beautiful moves, but it's kind of small moves. You see that? Like little small, higher highs, higher lows, right? Okay. So all we know right here is that we were trending down. Price hit this, whatever area this is here. And if we want to see, is this area really important? Go back out, look at the bigger picture, right? And pull this box all the way back and see if it's got any correlation. What happened right here? The last time price was here in 02.
Went up.
Yes. It hadn't been back since. So this is saying something that here we are 20 years later, she's back here. What do you think may happen?
It will go up.
It might go up. Okay. That doesn't mean she is for sure, but now we got a high probability that, hey, we're in an area where price may buy.
So that would be more of like a demand type of buy?
Yes.
Okay.
Big buys, big sales. We got huge buy right here. We may have another demand right here, big buy. Okay. But we got to be patient.
So this is a time, so let's say more people would invest in the market, then it would just gradually go up.
Yeah, possibly so, depending on how the banks and stuff are trading. You got manipulators in the market that can make the market go certain ways. That's why you got to keep your eyes open.
Okay.
Okay. So here we are. We've marked this up. You know, price came here, hadn't been here since 2002, and now she's starting to buy again. So that's on the weekly. Let's pop down to the daily. Now on the daily, what is she giving us? What does it look like right here? Price is right here. Looks like she's kind of giving us a little bit of an uptrend, right?
Yep.
Kind of trending up a little bit. It's a little choppy. This is definitely a little choppy here. You kind of can't tell what's happening here, but it looks like we're overall going up. Okay, so we want to keep that in our mind. Let's go to time frame 4, hour 4. Okay, now within here, if you want to, you can delete this box because this is from the higher time frame, just so it won't confuse you. So I'm gonna delete this. Okay. So here, boom. Now we got some structure. Let's see if we can find some more support. So if I look right here, I can line this up and look at that. This is a support zone. You see that?
Mm-hmm.
Price
Or
has
usually
bought.
it doesn't, yeah.
Price is bought in this area, right? And then if we kind of look right here, we kind of got a resistance zone. Okay, it's a little choppy up in here because we already saw from the higher time frame that this was choppy anyway. So it's not going to be the cleanest, but we do see where price was coming here and selling, right? Now, what is she doing? It looks like the direction of the market is changing because we got impulse, correction, and it looks like we're trying to give a continuation. You see that?
Yep.
Right? So now based off of the 4 hour, again, we want to get as close to price as possible. So let's zoom in. Let's go down to the 1 hour here. Now look at this. Okay. Now, because we were drawn up on the previous time frame, we already got our support area. So this is showing a support area right up in here. We just want to readjust a little bit. We got our support area. Now we got a resistance area as well. Possible resistance area that's forming. Okay.
That'd be kind of hard to pivot there, right? Because it's so low right now and it's gradually going up. So like it would be kind of.
Yeah, it'd be hard right here because it's not clear. It's a little chop. This is choppiness. There's a little noise up in here. It's not really being consistent and hitting that ceiling. It's kind of being consistent and hitting the floor, but the ceiling is a little janky, right? So this candle is currently forming right now. So with that being said, we don't know what's about to happen. This could turn around and be a sale. But what we can do is, again, look left and see what it's telling us here. And if we look left, we can see we're kind of in this choppy range right here.
Yep.
Right? And now ending down here at the 30-minute. Okay? We see it a little bit clearer. We definitely got the range here. She's sitting in the resistance area. So this doesn't necessarily mean we need to sell right now. This more so means let's just be patient and see what's happening because we don't know what this is. We see that she's ranging, but we don't know if she really wants to continue up or not. Okay? So this is market structure. All right? This is market structure.
Okay.
Take these notes from what you took with me tonight and just reread them. Reread them. Go to tradingview.com. Jalen can hook you up, show you how to make your account. It's a free account. Or you can do it. He'll show you. You can do the same stuff on Monara. Like I said, we only did this here just for the sake of Monara has a lot of stuff on it sometimes. Once you get a little bit more advanced in your learning, I'll show you how to work Monara and how to, it's just like TradingView. Okay. But for the time being, you can, have your TradingView account and just follow what I was saying. See if you can identify the support and resistance. See if you can identify the higher highs and higher lows or the lower lows and lower highs, right? Okay. So, any questions for you? How you feel?
I feel good. I feel like you explained it very well
Okay,
and in depth. So I didn't really have too many questions.
okay.
So I definitely understand the concept of it. Um,
Cool.
I say my biggest question is how much do you usually go in? Like, do you usually do like more of a mini lot or it's like a
It's
10
based off of
$20?
it's based off of the amount that's in your account.
Okay.
Yeah. So
Okay.
it's based off
And
of
then
how much is in the account. So if you got $100 account, you're gonna be wanting to use those smaller lot sizes, that 0.01 to 0.09, right? If you got between like 100 and 500 in the account, 500 and up, really at 1,000, then you can start using the 0.10s, okay, the 0.10s, okay.
all right. And then I heard you talk about the subconscious
Yeah,
like earlier. Because I've been reading this book. It's called the Power of the Subconscious Mind.
yeah, for sure, definitely.
Yeah, so I really been like tapping in with that. So like
Okay. Yeah, if you
interesting.
want to learn more about that, that's really my specialty, my passion is spiritual success laws. So if you do want more information on that, hit me up. We can do another session on that. It's a whole another different topic. It has nothing to do with trading, but I can show you how I can make everything to do with trading.
That like laws of the universe, all that type of stuff.
All
Yeah,
of that. Yeah, Bob
good
Proctor,
people do
Tony
that too.
Robbins, yeah, Kevin Trudeau. Those are the individuals I follow. Earl Nightingale, all those individuals there.
Okay, because
Yeah.
I'm reading and then I'm also reading the holographic universe.
Okay.
Talking about our reality is basically like a 2D type of thing where everything's already written out. Just we have
Yeah.
to get to that certain timeline with the frequency you think on and stuff.
Yep, it's exactly right. Vibration, energy, frequency for sure,
Yeah.
man.
Yes. Yeah. You already know.
All right, cool.
Told you she